Hey YouTube, so this is just an update video for my stock market vlog. So again, it's my account. So this is what so this is what I have right now. So here's what I'm holding now. So I have TLRY because the earnings report is coming up. That's why I bought it. And then BTE, so I'm still holding those because I can't sell them until the price goes up. And then I have some BT calls and puts because I thought maybe there would be some big price change. But anyways, the price went down slightly, so I sold the puts because I want to use the money to invest in something else. And then BlackBerry. So before the BlackBerry earnings report, I bought 20 straddles on BlackBerry. The price changed quite a bit, but I don't think it changed enough for me to break even. So I sold the puts because the price dropped by $1. But yeah, I have to hold the calls, so there's nothing. So I don't know. I think I'm gonna lose money on that. But it doesn't expire until June, so I'm just hoping that BlackBerry will go back up in price by June. I don't know if that will happen. I mean, I've read a lot of news about BlackBerry and how I don't know, it's gonna turn into two different companies. One is an IoT company, and then the other is the cybersecurity company. I don't know. So hopefully the price goes back up, so that I can don't lose money on my call options. And then Bitfarm. So Bitfarm, I bought Bitfarm because I thought it was gonna go up, and I sold some covered calls on it. And so far it's a loss, so I don't. Hopefully the price goes back up. And then WEED, so bought some more shares of WEED because on the okay, I'll explain why I did that. So let me just wait for this to load. Okay. So there's a bunch of places that I look at, and one is unusual options activity. And this was for today, so I'll have to go to Canadian options. Okay, let me just wait for this to load. And so for Canadian options, unusual options activity. I don't know if I can find it. Oh, I think it's under this. Unusual options volume. So I looked at this, And then two are very interesting. So first one is Onyx, and then 500 calls, 2 puts. So somebody really thinks, people really think that the price is gonna go up. And then the second one is WEED. So 2,600 calls, 290 puts. So it's like 89% are calls. So that means that 89% of people think that WEED is going to go up in price. So if everybody thinks that it's going to go up in price, then I'm going to buy it too. So that's exactly why I did that. And I sold some call options on it. And then so these are from before the 10-to-1 reverse split. I'm still trying to buy these back, but I can't buy them back for a reasonable price, so I'm just waiting. And then CLS, so I still have the straddles for CLS, and I think they're gonna expire worthless because it's not gonna be above 42 or below 32. So and then the CLS long call, so that expires in June. I have a long time to wait for CLS to go up. I think it will go up in the long term because it has a lot of positive reviews in the news, at least based on last year's performance. And then CCA, so CCA is, I bought 2 straddles for CCA because I thought, because the earnings report is coming up, so I thought maybe there would be some big price change. But anyways, I already sold the calls because it went up a little bit. It went up to $60. So I sold the calls because I wasn't sure if it was going to keep going up, because I'm holding it until June, and the long-term trend, if you look at the long-term trend for CCA, long-term CCA, and I don't know if it's a reliable indicator, but if I look at 6 months, it's down 12%. So I think from now until June, in the long term, I think it's going to go down in price. So anyways, I'll hold the puts. Maybe it'll rise up a lot after the earnings report, I don't know. But I think it's going to go down, so I'll hold the puts. There's a fly here. And then Dollarama, so obviously there was an earnings report for Dollarama, so that's why. Sorry, there's a fly. Okay. There was an earnings report for Dollarama, so I did a straddle. Went down, so I sold the puts, but I have to hold the calls, and it's gonna expire worthless, I think, because there's no way it's gonna go up above $100. And then the puts, so these are for June, and so I think it's above 92 already. I don't know what the long-term trend for Dollarama should be. I think it'll go up slightly in price. I don't know if it'll go up in price by a lot. So let's just look at the 6-month trend. Yeah, so I think in the long term it's gonna go up. So that's not good, because that means that these puts are gonna lose value. There's nothing I can do except maybe wait for, I don't know, if the stock goes down, then I'll sell the puts for a profit, but I don't think that will happen. And FM, so FM is interesting because it went down a lot and then it went back up. So I bought some more shares and then sold some more covered calls. And so one interesting thing about FM is, because I read in a news article that if FM can't has to shut down the mine in Panama, then it has a lot of liability. So it has $1 billion in loans due in 2025, which means that if it can't secure its loans, then it has to default, which means it might have to file for bankruptcy, but that wouldn't happen if it was bought out by Barracks, which is ABX, because ABX wants to buy FM, and then let's see, and then some other company either wants to buy FM or wants to have like a major stake in FM. So I don't know, because a lot of other companies are interested in buying out FM. I don't think it's going to be a problem for it to secure its loans, because it's going to get funding from other companies, either through a merger or a buyout or something. So I don't think bankruptcy is going to happen, because it has a lot of assets in Africa, I think in Zambia, even if it has to sell everything in Panama. So I think it'll be fine. And then Hut, so Hut, I bought it at 20 because I thought it was going to rise, but it dropped down to 15. Not sure if it's going to drop or rise, because see, if I look at the trend for Hut, let's look long term. So long term, long term, okay. Long term it's gonna drop because 6 months ago, so yeah, it's 39% lower than it was 6 months ago. So I don't know. Could drop a lot, could rise a lot, because the value of the company depends on the price of Bitcoin, because it's a Bitcoin mining company, so obviously all of its assets are in Bitcoin, so the value of the company depends on the value of Bitcoin. So anyways, that's basically what that is about. I don't know if it's going to go up or down. Depends on if Bitcoin goes up or down. And then IVN, so this is the mining company that sold a lot of covered calls for. So I think this company is good. It's like a very stable company. Not much interesting news about it, other than the fact that it's slowly expanding and making consistent money. It's not a risky company. It's definitely growing and growing very steadily. So this is probably the most stable stock that I own. And then MRU, so I bought 2 straddles on MRU because it has the earnings report coming up. I don't know if there's going to be a big price change, but that was the reason why I bought the options. And NXC, so still holding 4 NXC calls from way back, and I don't think they're gonna be in the money because the NXT has been dropping. So if I look at NXT, oh, it could end up in the money. Yeah, because it's at 944, and it just needs to finish above 950. So I don't know, it could finish in the money, hopefully. And then Shopify. So Shopify has been very interesting because it went down, now it's going back up. So these ones that expire on the 24th, I don't know if they're gonna finish in the money because right now Shopify is at 107. So I don't know if it's gonna go up to 115. Very low likelihood. It could. I hope it does. Definitely not gonna drop down to 84. But these ones, the long calls that for June, I'm definitely gonna keep holding these because I think they're gonna make me a lot of money, and because I think everyone believes that Shopify is going to go up in value in the long term, in the news, and then based on the options trading volume. I think someone bought like 8,900 or sold 8,900 puts on Shopify. So that's it's like $56 million in security cash. So to secure those puts, so that means that they definitely think that's gonna go up. So I'm not worried about that. And then Suncor. So Suncor, why did I buy it? Okay, so Suncor. The reason why I bought Suncor is because it's very low volatility, and so the call option is very, very cheap. So let's look at the long-term trend. See, it was up 5% over 1 year, and this is a 2-year call option. So I think it's in the long term, I think it's gonna pay off. And then TLRY. So TLRY just had its earnings report today, January 9th. But it wasn't very interesting. It just went down 9%. That was it. So yeah, it wasn't a particularly interesting earnings report. And so I have 700 shares of TLRY, and then sold 7 covered calls on it. And I also have 10 puts because I think I bought 10 straddles and then I sold the calls. Can't sell the puts because it's still above 275, so if I sell now I lose money. So those are my holdings, and right now the book value is down 10,000. So because most of my stocks and my options are down. So so let's look at my allocation. Oh no. Okay, I don't want to put in my information, obviously, but I don't want to end the video either. So I guess yeah, because obviously I'm not going to put in my information while I'm recording a video. So anyways, I'll just explain what my strategy is. I just came up with it today, so here's what I plan to do. So basically, if I look at TLRY, at TLRY Long. Like, I don't know if I hold it up, then you can't really see it. So, unless I switch to like a main camera, but I think I would have to end the video to do that. So, and I don't know how to edit videos, so so I'm just gonna do this. So, so the spot price right now is $2.83. So I'm holding that long, so it's a long position, and then TLRY, and then I'm gonna do what's called a calendar spread. So it's where I buy and sell. So I'll explain it. So first I sell a call option. Strike price $1. Premium is $2, and delta. So delta is 0.95, and then I also buy a call option. So the one that I buy is earlier than the one that I sell. So then the strike price is the same. Strike price is $1. Premium is $1.88, and delta is a little bit higher, 0.99, but that's the closest I can get. Because what you want is them to have basically the same delta on the long and the short, and then the premium for the short is higher than the premium for the long, so that you have a net credit. So the net credit is $2 premium from the short minus $1.88 from the long, so then in total you make 12 cents credit. And then so the break even, so how you calculate the break even is, let's say that so the credit is 0.12, so that means we can lose 0.12 and still break even. So then the delta on the short is 0.95, so 1 minus 0.95 and then I'll call this capital X. So then that means that capital X is equal to 2.4. So using this, I can calculate break even. So break even is equal to 2.83 spot price minus 2.4. So that's the maximum price drop, and still not lose money. So that means that as long as the price of TLRY stays above 43 cents, I make money. So that's the meaning of break even. So then the maximum loss. So this is under the assumption that even if the price of the stock drops from 283 to 0, the delta is always stays at 0.95. So then the maximum loss is 2 cents per share. So that's a very low risk. So that's the maximum loss from this strategy. And then the maximum gain is unlimited. The reason for this is simple. If you look at why the maximum gain is unlimited, so this is a two-leg strategy where I'm holding the underlying. So suppose we wait until 2026 January 16. Because I don't have to buy back the short position, then after it expires, that's it. I cannot lose money from the short position as long as I don't buy back. And then the long position, so if it rises higher, then I can sell it for a profit. So the meaning of that is that maximum loss is 2 cents per share, maximum gain is unlimited, and break even is 43 cents per share. So that means that as long as the spot price of TLRY is above 83 cents per share, I am guaranteed to make money, and the profit is unlimited. And the profit is the leverage is 1. So the total leverage is 1. It's the same as holding TLRY, just holding the TLRY stock. Well, it's like holding 95% of a TLRY stock, because the delta is 95 or 99 or whatever. But it's basically the same as holding TLRY, the stock itself. But obviously, if you were just holding the TLRY stock, then you make money if TLRY rises, and you lose money if TLRY drops. So then, so that's why I do the short position and the long position. So, so the short position, if I'm holding the short position, along with the stock itself, then for every dollar that the stock drops, the short position makes a 95-cent profit. And then if TLRY rises, then the TLRY stock price rises and the long position rises. The short position falls in value, but I don't have to buy it back, so it's not counted as a loss. So that's why the loss is only 2 cents per share. And then so it's essentially the same as a straddle, in the sense that no matter what direction TLRY price changes, if it goes up or down, I make money. The difference between this calendar spread and a long straddle is what I did before, and what I explained in my last video, is that for a calendar spread, you don't pay money, you earn money. I make 12 cents per share from the spread, because the short position, I'm selling the call, so I make the premium, and then the long position, so I have to pay the premium, but obviously the short position has a higher premium than the long position. So I have a net credit of 12 cents. So I'm getting paid to open the calendar spread position, and I make money no matter if the price of the stock goes up or down. Yeah, that's the, well, assuming that, okay, so assuming that the price goes back up after it goes down, then I make money from the short position, because what I would do is I would buy back for a lower price and then sell another short position. Anyways, that's the basic idea of this. I don't want to make this too complicated, and I don't want this video to be too long, so but anyways, I'll explain it in the description. And so I'm sorry that I can't explain you know, like look at my allocation and then the gain loss. But basically the summary of it is like this. So for my gain loss, gain loss for the past year I think is positive 5,200. But let's see what my unrealized gain loss is minus 10,500. So the book value of my portfolio is still down 5,000, but in terms of my realized gain loss, I'm up 5,200. So, but if I were to sell all my holdings now, then I would be down 5,300. That's basically the idea. So the question, if did I make money, or am I making money or losing money? In terms of what I've exited out, the positions that I've exited out, I'm up 5,200. But if I were to exit out of all of my holding positions now, then net I would be down 5,300. So yeah, I'm making money and I'm losing money depending on how you calculate it. Anyway, so then there's that, and then gain loss. So allocation. Well, I don't need to go into detail about that because I think based on my holdings, so you already know what I'm holding. Yeah, so I'm just gonna end this video here.